Hello everyone. I will continue with the income statement adjustment and focusing on rent income. I just want to finish so that we cover almost every area that they can make an adjustment on rent. This one is not a common one. The ones that we've done earlier, they are most common one. Right, it says here, you are given a pre-adjustment trial balance on 30 June 2016. That means that's the year end. And rent income in the pre-adjusted trial balance is given as 101,900. Then the rent adjustment, it says the monthly rent did not change during the year, right? Which is unusual. Then during April 2016, the tenant paid 6,000 for repairs to the premises. He deducted this from his rent for May 2016. So he deducted the 6,000 from the rent for May 2016. His repairs are the responsibility of the company. The repairs were not recorded. The rent for July 2016 was received and deposited in June 2016. That means there is a prepayment. There is a rent that was paid in advance. All right, okay. So we need to just do, it's a little bit of working. But what you need to understand here is that the amount of rent given, this amount given, right, is the amount that was received, because that's what they recorded. They never recorded repairs, so it's the amount that was received. So they received a total of 101,900. That means that was minus the 6,000. But in terms of accounting, right, how much rent income are you supposed to record? So you're supposed to record the full rent income, right? Even if you received, after they've deducted their repairs, they offset, the repairs that they made with the rent that they're supposed to pay you. But as a business, we record the full rent income, the matching concept. That's the full income that you're supposed to record in terms of the revenue. How much revenue did you receive, right, for the year, right? It includes that particular rent, because in actual fact, you're supposed to receive the rent, right? Then refund them for the repairs that they made, but they in turn offset the repairs with the rent. So the first thing that you need to do is you need to adjust the rent income that was received. So the rent received is 101,900. Then the deduction for repairs it's 6,000. So the total rent that should be showing on the trial balance, it should be 107,900. Right. Then what you need to do is you need to find out. Remember, they said rent did not increase. Right. What was the monthly rental? So the monthly rental will be 107,900. Right. Divided by what? 13. The reason why I divide by 13, the July rent was received already in June. I remember our year ends on 30 June, but we received the July rent, so that gives it 13 months. Right, then if you divide that by 13, that's 107,900 divided by 13, you get 8,300. That's the monthly rental income that we're receiving. So if you go to other incomes, I'll leave your rent, income. So you can either write it as what, 101,900 plus 6,000, then minus 8,300. That's the rent received in advance. So that will get you, now that's minus 107,900. That will get you 99,600. Then you go to your expenses, operating expenses. Then you have what you call repairs, because they were not recorded, right? That will be 6,000 for repairs. That's the adjustment that we need to make. The only difference now, the rent did not increase, but there was an offset of rent during the financial year. But you need to recognize your full income of rent. You can't recognize after deducting the repairs, right? You need to recognize your full income, right, for rent, then recognize an expense for repairs. So that's what you need to do. It's a simple, straightforward, but it can upset you if you never met it. But what you just need to understand is you record the full income, right? If you are given any offsetting, then whatever offsetting was done, you create an expense for that and operating expenses. So that's how they should be, right? You can watch other videos for rent income adjustments, right? I will link them up on the information or on the card, then you are able to access them easily.